$25 per week may not seem like it's going to pack that much of a punch, but if you forego that very tempting Burt's Bees gift set and instead decide to invest that amount every single week, over time you'll find yourself with a wheelbarrow full of wealth. I'm going to show you how you can take that $25 per week and turn it into $2,000 per month in dividend income, and we'll look at a few different ways you can go about investing that amount for the most optimal results. Throughout the video, we'll be comparing 3 different portfolios, one that has a low dividend yield but offers a substantial amount of dividend growth, another that is the opposite and has a high yield but low dividend growth, and the third portfolio will be somewhat of a balance between the first two. And let me know in the comments below which out of these 3 portfolios you think will get you to $2,000 per month the fastest. It'll be interesting to see who guessed correctly. But anyway, starting with the low yield, high dividend growth portfolio. Now, while your starting yield may be low with this approach, we're talking maybe somewhere between 1 to 3%. The consistent growth and reinvestment of the dividends over time can have a huge compounding effect that will leave you with more income than if you invested in something higher yielder without any growth, as depicted by the chart here. Additionally, the ability to maintain consistent dividend growth over the years is only achieved by established and reliable companies like Microsoft, JP Morgan, Johnson & Johnson, and Home Depot, which are all great companies to have and can easily be bought together as a package deal through something like DGRO, the iShares Core Dividend Growth ETF. In total, DGRO contains over 400 different dividend growth stocks, and as we scroll through the list of holdings here, we'll see some very recognizable names in addition to the few we already mentioned. This is a really solid fund. Now, the big question is, if you invested $25 per week into DGRO, which has a sub 3% dividend yield and a near 11% dividend growth rate, which is really nice, how long would it take to be generating $2,000 per month in dividend income? Well, if you started with an initial investment of $1,000, it should take you roughly 32 years until you were able to be generating $2,000 per month in dividend income. So quite some time, and at this point, your portfolio would be valued at nearly $350,000. And just for fun, if you kept this going another 8 years, so after 40 years total, the growth in that time is honestly mind-blowing. In only 8 years, 8 more years, your dividend income would balloon up to $93.6 thousand per year. So almost $8,000 per month, and you'd basically have $1 million portfolio. And that right there is a fantastic example of the power of dividend growth. You wouldn't get that same aggressive jump in income if you invested into something that was higher yielding with low dividend growth, as we'll see in just a moment, but it's a trade-off, I suppose, because it did take quite a long time with DGRO for you to get to a point where you were bringing in $2,000 per month. And with that in mind, let's now take a look at a high yield example to see how it actually compares to just investing in DGRO. For this, we're going to keep it simple and just put all of our money into something like JEPI, the JP Morgan Equity Premium Income ETF, which at the time of this recording has a near 10.5% yield. And by the way, putting all of your money into JEPI is not something I would recommend actually doing in real life, so please don't go doing that. This is obviously just to demonstrate the different possible outcomes using different investment strategies. But anyway, I personally do have a small allocation of JEPI in my portfolio, but like I said, I would never bank my entire retirement strategy on this one fund, especially considering it's only been around for a few years and they pay a variable dividend that can fluctuate pretty wildly any given month. But anyway, if you invested $25 per week into JEPI, starting with an initial $1,000 investment, it would actually only take you one less year to be generating $2,000 per month than it did with DGRO. It would only take you about 31 years. But anyway, if we push this out to 40 years like we did in the first example, this is where the difference between high yield and high dividend growth really starts to show. After 40 years of investing into a high yield portfolio, you'd only be generating $71,000, which is about $20,000 less than what you'd have if you went with the high dividend growth portfolio. Not only that, but your portfolio value would be so much lower. You'd only have about $500,000 compared to the $1 million you'd have from investing in DGRO. So it's kind of a no-brainer. But what if you combine these two strategies? What if you had a portfolio that had a high dividend yield and a high dividend growth to give you the best of both worlds? In theory, this sounds like it would yield the best results, right? Well, let's find out, and we can demonstrate this using this 10-stock portfolio that I made here, which does give you the best of both worlds. We got some high yielders here, we've got some nice stalwart dividend kings, we've got some high growth dividend stocks all the way down here, we've got one more high yielder here with EPT. So like I said, it's got a range of just about everything. Now, if we assume an equal weighting of all the 10 stocks in this portfolio, that would leave us with a 4.28% dividend yield, which is certainly higher than what we were getting with DGRO, but is quite a bit lower than what we were getting with JEPI. But nonetheless, we'd also have a very high 5-year dividend growth CAGR of 10.17%, which really isn't actually too far off from what we had with DGRO, but obviously much nicer than JEPI's. So this portfolio pretty much offers everything. And I know just based on some of the holdings in this portfolio, we would also be generating some nice share price appreciation over the years. And actually, this little portfolio here has outperformed the market over the last 10 years. If you would have invested $1,000 into it back in 2013, today today you'd have nearly $36,000, which is nearly $8,000 more than what you have if you would have just invested in the S&P 500 during this timeline. Looking at the annualized returns, this portfolio would have had a near 18% growth rate over these last 10 years compared to the S&P 500's 13.5%. So that's about a 4.25% difference between these two. That's pretty substantial, guys. But anyway, finally, if you were to invest $25 per week into this 10 stock portfolio, it would actually only take you about 25, 26 years, somewhere in there, to be generating $2,000 per month in income, which is the shortest amount of time across all of the different scenarios we've looked at. And once again, if you kept it going for another 14 years, after 40 years total, the results would be absolutely insane. According to this, you'd be bringing in almost $500,000 of annual dividend income, which is an amount that I can't even fathom and sounds almost too good to be true. But you'd also have a $2.4 million portfolio, so you'd be sitting quite comfortably. So if I was you guys, I would try and get your hands on a portfolio that was kind of like that one, something with a decently high dividend yield and also a nice dividend growth rate. But I'll admit, some of the stocks that we saw in this portfolio were a bit obscure, especially for the beginner investor. Like if you're just starting out, you'd probably have no business investing in something like Ares Capital or Enterprise Products Partners, which is why I created this portfolio right over here that would be perfect for the brand new investor. This 10 stock portfolio has absolutely crushed the market, and if you're new to investing, it should give you some really good ideas for your brand new portfolio. So click right over here to check it out, and I'll see you in the next one.